So now I would like to invite our distinguished guest panelist and our expert moderator, Mr. Bob Grossman, Bob, co-chair of, of Israel practice of Greenberg LLP, and the panel will explore the key fundamentals driving growth in agriculture. All the panelists.
Assigned seats. So while the panel's coming up here, we're still missing Ron? Okay, that's good, because... so yeah, I'm Bob Grossman, and I do co-chair Greenberg's Israel practice. I'm an M&A securities lawyer. And to give you some context, the deals I've worked on here include the Ivex, Teva, Prolor, OPCO, and the biologic sale to Monsanto, and a number of smaller transactions. We have 36 offices, including an office in Tel Aviv. And you may be wondering, what am I doing on an ag panel? Well, I have, as you can see, I have a very good relationship with food. So, and I guess that was it. Also, I'm the only panelist in this panel with a tie. So I'm known as the tie guy, or the guy with the tie, which also stands for GT, which is Greenberg, Traurig, and Good and Tough. So anyway, I'm just going to very quickly introduce our panel members, including the one who's not here. So we have Rob LeClerc. I'm going to do it in alphabetical order. Ph.D. and CEO of AgFunder. We're going to let them, when I call on each one initially, they will, as we did in the last panel, give you a little bit of information about themselves. We have the guy running down the stairs, Ron Meeusen, who is the managing partner of Cultivian, Sandbox Ventures. He has 31 years in the food and ag industry, which means that there's actually someone on the panel who's close to my age. We have Mitch Presser, the founding partner of Paine & Partners, private equity firm in the food and agribusiness, and actually a former lawyer at Wachtell Lipton, and as he is a former lawyer, we call that a smart lawyer. And then we have Gideon Soesman, a good friend, and co-founder and managing partner of GreenSoil Investments. So, you need, as I told everyone, that you'll give a short introduction about yourself when you answer your first question. Okay? So, this panel is on exploring the key fundamentals to driving growth in agricultural investment. We're going to begin with the general focus on what's driving growth in the industry, and then try to get more specific and practical about what this means for businesses, large and small, and businesses in Israel. So we're going to start with our first question, and Mitch was very adamant about being the guy who has the first question, because he's really the guy who should set the foundation. So why, Mitch, is agriculture and agritech a good area of investment? What's driving that today?
So as far as how's this? I can hear very clearly. So as far as introduction, I'm a founding partner of Paine & Partners. We're a $1.2 billion private equity fund based in the U.S. We have 3 offices in the U.S., New York, Chicago, and San Francisco. Our focus is on food and agriculture investing. We and our sort of predecessor firm made 8 investments in food and agriculture over the past number of years. And we really focus across the full value chain, although primarily we tend to like businesses that are more upstream, so closer to the resource, that either can control resource, critical resources, or have technology that make the efficacy of growing resource better. So it crosses over into technology, but we tend to invest in more mature businesses. Most of our businesses have at least $15 or $20 million of EBITDA when we buy them, and our goal is to continue to grow them. Typically, we're investing additional capital to help them grow. So we're looking for businesses that already have a proven business model, are very strong, but need additional capital and may need additional help to find the path to growth. I think if you want to sort of try to conceptualize it, we're a little bit like a bridge between the entrepreneur and the Syngentas and Monsantos and Bayers of the world. We've sold in our predecessor fund, we sold 2 businesses, one to Monsanto, which was the largest fruit and vegetable seed company in the world, which they continue to own and have done very well with. And we bought a business called Advanta, which was another seed business, together with Syngenta. Our current investments include drip irrigation, wild seafood. We have a business that takes seafood waste and recycles it to turn into food ingredients. And we also own the 50% owners with the founding family of the largest produce business in Australia. We have a number of other businesses in food and ag. So going to the question of why food and ag, and I actually think it really is an important question. We've heard so much about it today, but sort of putting it all, taking everything we've heard today and starting to put it all together. You have population growth going from 7 billion to 9.3 billion. But one of the factors that people didn't spend much time on today, and I think maybe the most important factor, is the growth of the consumer class. The consumer class in 2000 was probably about 25% of the population. So maybe that was about 1.25 billion people. If you look forward to 2050, they expect it to be about 70% of the population. So that's going to be over 6 billion people. That's really, it's not just the growth from 7 billion today, but to 9.3 billion. It's the growth of that consumer class, which eats more calories as they get richer. They also go to different types of food, so they're eating animal proteins. So what the expectations are that food consumption will increase by 70%, but animal protein will increase by 100%. And again, when you take the animal protein into context, in order to grow an animal, a cow, for example, which is probably pretty much the most inefficient, it takes 7 pounds or kilos of feed for every pound or kilo you want to grow. So you have this geometric growth on demand of resource, on grains, that's coming, and we have to figure out a way to keep up with it. And you look at that in the backdrop of limited resource. Arable land is flat. 30% of our used arable land today is degrading. Water, which is sort of imbalanced today, they expect by 2030 to be a 40% deficit. So with each of those, again, one of the really important things is the slowdown in the pace of technology and or technological advancement. In the 1960s, technology was increasing productivity by about 3% a year. We're now down to about 1%. So when you put all those in context, agri-tech, broadly defined, is really the only solution. We need to do more with what we have. And that's why it becomes such an important area and such a valuable area. And ultimately, as an investor, we'll create a lot of value. Because if we can find ways to increase that production, that's really where we're going to create a lot of value for our investors and to feed the world. There's a guy named Mark Linus. He's an environmentalist and an author based in the UK, and he used a term which I love, which is sustainable intensification. It's not just about intensification, but we have to do it in a sustainable way, because otherwise we're just stealing from the future. So, ultimately, this is the goal, and I think if again, listening to the first panel, who all sort of pretty much vehemently agreed with each other, but I think it was Ginny who used the term mosaic of technology. we're not going to find this in one way. It's really through layering, because there probably is no silver bullet. So it's all these technologies put all together that are really going to help us, and that's why I think that's why we're all here, and I think that's why it's a really great area to be investing in today.
Does anyone else want to answer that or add anything to that? No? Okay, you do?
Well said.
Okay. So we all agree again, too? We'll find something to disagree on before this is over. So, Rob, why don't you do a little intro, and what areas do you think are driving investor interest today, and are they different in any way, shape, or form from what the real needs are, or do they sort of coincide?
Okay, so my name is Rob Clair. I'm the CEO of AgFunder. We are a online crowdfunding platform for global agriculture. Unlike Kickstarter or Indiegogo, we do investment crowdfunding. So this sort of launched out of some legislation that came out last year that means you no longer have to have a substantial pre-existing relationship with your investor. And so now you can have open online investment platforms. And so that's really what we are, and it was sort of like a market. Just to give you a sense, if you don't know what crowdfunding is, it's just really another word for syndication. And so it's a platform that syndicates investors into an investment opportunity. So jumping into the question, so some of the drivers, you know, on the technology side, what we're seeing really is moving automation, which was formerly in the factory, and really bringing it out to the farm. So before, you know, you would have these sort of Toyota assembly lines that were running fairly autonomously, but these things didn't work out in the field where there's a lot more range of variables and degrees of freedom. And so I think one of the things that's going to be driving investment is investment into smart technology that can operate in these dynamic environments. One example is a company that we've talked to is called Robots, and they develop an autonomous robot as a service. So the idea is that you would sort of dial this up when you wanted these robots to come and fertilize your cornfields. And this, what's interesting about this is it can be very accessible to small farmers as well. So, and that sort of segues into the other aspect that I want to get into, and that is, you know, we've seen there's a lot of opportunity to scale large farms and reduce costs that way. And in doing so, we lose a lot of the small farmers. And there's sort of pushback from the consumer that they want more local farms, they want smaller farms. And so if we can provide some services, almost like Amazon Elastic Cloud, but for hardware that can show up and do data analysis on your field and tell you what you're doing wrong, and apply fertilizer and plow and combine and do this as a service in a very scalable way, it allows smaller farms to operate and not just large farms.
Okay, anyone else? Go ahead.
Do you want me to introduce myself?
Since you're answering the question.
Yeah. Well, I'm a botanist, and now I'm a venture capitalist. It's a long story. But about 7 years ago, I was running ag biotech R&D for Dow Chemical, and discovered that in the United States there were 850 private venture capital funds looking for technology investments, and the number that were focused on agriculture was a digit less than 1. And I thought, that's crazy. So I left Dow and raised a fund, and it's done quite well, and we've just closed on our second fund. So we have about $100 million under management, and we're pretty much the only pure play food and ag technology fund in North America. Now, you know, we're much earlier than Mitch. He's looking at companies that have revenue and EBIT, positive EBIT. We're looking for technologies. In fact, 2 of our 10 companies we started from scratch right out of universities. One of them actually had a little bit of revenue when we invested. We're not opposed to revenue, but we love technology. Yeah, we don't want to be distracted by profits. Yeah. But so that's who we are. And our second fund, first fund was too small. We had to stay in North America. Our second fund will invest globally. So I'm here basically looking for technologies to invest in. So I wanted to add a couple of comments. I agree with the drivers that have been well articulated by Mitch and Rob. There are a couple of other things I think are related factors that I believe are heating up in the last 5 years, the investor interest in food and agriculture technologies. One is the fact that commodity prices have gone up under the demand pressure that you talked about. That pumps money not just into the farmers' pockets, but into all of the industries that serve those farmers, and all of those industries now have much healthier cash balances to go out and buy technologies. So that works its way downstream for investors like myself. When I'm investing my LP's money in a technology, there's a much better chance or ability that Syngenta or Monsanto or John Deere or Mokdashim, they're all much healthier when maize is at $5 a bushel than they were when it was at $2 a bushel, which was only 5 or 6 years ago. So the opportunities for nice returns have gone up. Along with that, in the past 4 or 5 years, we have seen a relatively steady flow of acquisitions where the investors have, in the ag technology space, where investors have made 10, 12, 15, 20 times their money. The investors in Climate Corp, I'm sure are smiling having sold it for $913 million plus 150 million earnout. Yeah, yes. Billion is a nice round number. But before that, we saw a biologics company acquired for $425 million, and the investors had put a total of $35 million into it. So we're beginning to see tangible successes for investors, and that gets investors interested. The one caveat I would say I've seen, though, is that there seems to still be, in the investment community as a whole, and Mitch, I'd be interested in your views on this, but from what I've seen, the last 5 years has been a real rush to invest in what I'll call familiar ag assets. That is, a dairy where you can analyze the spreadsheet, and it's got a history of cash flows, and you can analyze that just like you would any other business. Or farmland where you've got real assets, and you can put an NPV on that, and you can do that. When these groups got to venture capital, these same groups kind of freeze up because there typically is no cash flow. They're typically, there are spreadsheets, but they aren't worth a tinker's damn because it's all conjecture, to begin with. And instead, what you need, instead of your sort of standard business skills to pick winning investments from losing investments, you need two very different skills. One is you need to understand the markets deeply enough to understand what is missing, not just how the market operates, but what are the unmet needs. And then you have to match that with an understanding of the technologies that's deep enough to be able to pick this technology as the winner over that technology. And I think most of the venture funds I've talked to that have been looking, and the investors I've talked to who've been really interested in ag, they kind of stop at the venture stage. They're still a little hesitant because they aren't quite sure that they're comfortable enough to do that. It also manifests itself in the groups that call groups like mine and say, look, we'd like to invest in ag, but we don't want to lead. So call us when you're looking for more money. And in our first fund, in fact, we brought $4 to the table for every dollar of our own fund we've put to work. So there's a real appetite out there, but kind of a nervousness about how to play the technology game in agriculture.
Yeah, don't give that up yet. I have one more question for you. You want to answer them first? Go ahead.
It's interesting what you said, because I think the same thing about private equity, and I actually assumed venture capital is easier for it, because when you think about venture capital, sort of say, well, everyone's investing in technologies that they don't really know if they work today or not. So or at least to an investor like me, there's always sort of this black box to it that, something goes in, something comes out, and someone pays $1 billion for it, and you sort of look and say, how did that happen? And you sit here today and you hear, I don't know how many, 12 companies, and I always sit there and say, boy, that sounds great. Isn't that amazing? So I don't have any expertise in venture capital, but what we find with investors in more mature businesses, and I think you're right, not over the last 5 years, I'd say more over the last 2 or 3, it's really heated up. People are really interested in food and ag, but there really aren't, as far as I know, a lot of specialists in food and ag, because those are industries that people stayed away from in private equity, because you have all these factors like weather and climate and disease that aren't made for putting a lot of leverage on a business and just going out and clipping coupons, which, the traditional private equity, that you really liked a more stable business, and it's still like a more stable business. But so what we find in our side of the business, investors are sort of looking at it and saying, we really should be investing there, but how do we get comfortable? And I actually liken it to technology, private equity technology. 10 or 12 years ago, before Silver Lake showed up, everyone said, private equity, you can't invest in technology. And then Silver Lake showed up and did a phenomenal job, and now there are a whole bunch of people. Same thing with energy. So I think people are getting there, but there's a lot that they don't understand yet. And you're right, it isn't. The first thing they sort of say, so you're buying farmland? We say, no, well, farmland, you get about 6-7% if you're lucky, because it's just not that type of investment. It's very hard for them to get their heads around, but I think there is a lot, I get calls from more private equity funds necessarily than I do necessarily investors, sort of say, well, sort of like you, we'd love to invest, but we're not really sure where. If you need more capital in something, we'd love to come in side by side. So I think it's a very similar dynamic going on in the private equity world.
So do you see it right now, private equity, more VC, more angel investing, or where do you see it heading?
We certainly see there are a lot of private equity funds that are, there are at least 1 or 2 who started to make investments. There are a bunch that have made 1 or 2, but certainly it's increasing. And my expectation is 10 years from now, it's going to be a very, very well-developed industry. We're going to have to look for something else where we feel we're more unique. But so I think it's going to happen, but it's going to take a lot of time, because it really is very different than what a lot of people have invested in before.
Yeah, well, most of these companies don't want to wait 10 years. So
then they have to come to me.
Yeah, okay. We'll get to that in a minute, because I don't want to leave poor Gideon on the end of the table here.
Can I just
sure, go ahead.
Make a quick comment?
Sorry, Gideon.
So just quickly, because I've spoken with quite a few people in the traditional Silicon Valley venture capital side of things. And so, the investment in Climate Corp, that was almost all Silicon Valley people, and people were talking about Climate Corp being the biggest company in Silicon Valley that no one had ever heard of because they were in ag. So people are starting to wake up to this, and there was a lot of talk within Silicon Valley about what was going on there, and people started to look at that. So Closely Ventures is probably a great example of a company that's investing heavily in ag. I don't know, maybe like 18 deals. Google Ventures has invested. Atomico was one of the very first money in on Climate Corp, and I think that was back in 2006. I go to conferences, I see Draper Fisher, guys from Draper Fisher there. And a lot of it has to do with now you can start using technology that they're familiar with and apply it to agriculture. So they're now comfortable having an entry point. And so if there's an entry point, I think you'll see these guys wade in more and more because they're seeing this global opportunity. Sorry, Gideon.
Thanks. So
I knew when Bob introduced me as his good friend that I would be in trouble. So.
Anyway, and since you had to wait, I'm going to give you a commercial. But actually, I forgot to say this in the beginning, but I just have to tell you how great this has been and what an amazing job Trendlines has done and how important this is to this country. And GreenSoil, which is a major sponsor, and also what you've been doing in terms of investing in Israel. So, and having said that, why don't you tell us what's going on here, generally?
So, 2 sentences about GreenSoil. We started around 2.5 years ago. And I think we saw in Israel exactly the same what you guys saw in the States, maybe a little bit later, that there's a huge issue. There are many interesting companies. There's a world need, but there are no investors that are focused on this area. So what we said, okay, let's set up a fund and let's start looking for companies. And we were amazed. We've seen over the last 2.5 years, I think we've seen more than 250 companies. And I can tell you a little bit later about the different kinds of companies we've seen here in Israel. We've invested so far in 5. We have almost $30 million under management, and we'll continue investing here because we see the opportunity. So I think if I look at differentiators, what's really happening in Israel, well, first of all, of course, there always has been an agro industry, and it grew out of a need. I think Professor Avi Perl spoke about it earlier today. He talked about, in a politically correct way, a geopolitical challenge. I always describe it as we are stupid enough to fight over the only country in the Middle East that has no oil and no water. We have 2 lakes, and one of them is a Dead Sea. So Israel needed its agro industry, and it started a very successful agro industry. Now, there are several interesting agro industries in the world, and you see a lot of companies in the Midwest, and you see some interesting companies in Canada, and Australia and New Zealand has many interesting startups in this field. I think the special thing that Israel has is that it has this agrotech industry right next to what I call the mainstream high-tech industry. And what I've seen over the last 2 years, and that's maybe the biggest difference compared to 2-3 years ago, is that you see an overflow of those two. You see at a management level. For example, in our portfolio, I think 4 out of 5 companies recruited senior high-tech managers that have their experience in high-tech companies that are not related to agro at all. But these guys, they know how to do fundraising. They know how to manage a company. They know how to run business development. And that's something new, because when we started 2-3 years ago, with all respect, there were many more agro-focused guys that didn't really have a clue how to build a company. The other thing which you see is, as a result of that overflow, is that you see technologies from those industries coming into the agrotech industry. When you look at all the sensing and sensoring companies, you see people really coming in with a big baggage of high-tech. For example, Danny, who just presented earlier, Mechteshim, his background is from 8200. It's like the core high-tech. So I think that overflow in Israel is providing a lot of value. And what you will see in the coming years will be a lead in very strong technologies going into those companies and making them very successful.
Yeah, someone told me today that a very good source, that there are over 700 companies that he's counted so far in the ag tech business in Israel. So I don't know if that's consistent with what you think, but...
Yeah, no, absolutely. What we look at is early growth. So we position ourselves, I would say my best place to be is at the exit of trend lines. I wait at their doorsteps to see what's coming out of their incubator. So we're looking for companies that have a product, that are starting to sell, are selling already. And again, in that niche, we've seen hundreds of companies. But there are bigger ones, very successful ones, success stories that already happened. And we see a lot of seed companies.
So this question is really for anyone, but what type of business what type of ag business would you be looking to invest in yourself right now? Go ahead. You're not shy.
I'm not shy. There are 2 areas that I actually find really interesting. One we talked a bunch about today, which is in various forms, which is precision agriculture. And I think, I don't remember who said it, I think it may have been Pelek from Syngenta, about localizing and customizing. And, the way we're going to get greater efficiency is really out in the field, sort of row by row, area by area, and figuring out ways to improve, looking at a field not necessarily as all the same, but there are different parts, different things will need different amounts of irrigation, different amounts of nutrition. So I think precision agriculture, and there are probably 10, 15 different areas, and probably underestimating that, because there are things as simple as GPS. There are things like in-ground sensoring. If you think about in-ground sensoring, that's going to drive so many different areas like fertilizer, irrigation, nutrition, because you're going to be able to tell exactly what's going on the ground and then customize, not to do any ads for any of the people who spoke before, but you think about EcoFer, what we were listening to before, and you have a station there with different types of nutrition and fertilizer, and it can customize right at the source and send different things to different plants in the same field. I think precision ag is a huge area, and probably one of the best places where we're going to see value creation. But the other area that I don't think I heard much about today, and is probably as big or bigger an opportunity, is waste reduction and waste treatment. Because I saw it in a McKinsey study, I think somewhere between 20 and 30% of food is wasted before it ever gets to the kitchen. It's not what you're throwing out on your plate, but it's in the processing. And if you think about being able to use that, we can solve most of what we need if we get to 100% efficiency. We'll never get to 100% efficiency, but there's so much opportunity there. And I'll give you one example from something we do. We bought a company in Norway about 2 years ago, I think, maybe a year and a half ago. It takes the waste from fish processing. So if you take your typical fish, once it's processed, about 40 to 45% goes to food. The rest historically got thrown back into the water, chopped up, thrown into the water. And if you don't process it typically within 24 or 48 hours, it'll never be able to be used. We bought a business in Norway that has a process using formic acid to stabilize it, so you can actually process it over a longer period of time. And we're recycling it. We're using it for animal feed. It becomes a food ingredient, and then those animals don't need to eat the grains that humans are competing for. So, again, it's a very small example. If you think about it, it's really it's no different than the rendering businesses that people have been operating for 100 years, taking dead animals and turning them into other products. But it's just adding some technology to it and really using it in pretty good ways. When this business started, people were paying the company to cart the stuff away. Now the company's paying to get it because it's a really valuable asset. Part of that's the increase in commodity prices, and part of it is just the efficiency and what we're able to do with it. So I think those are, to my mind, those are two great areas.
Just to add to that, I think I agree with him on the part of precision ag. You have a situation here where net farm income has sort of doubled, or 250% growth over the last 10 years, but net inputs have increased about 200%. So for farmers, they're going to be looking at, how much net income am I getting, particularly if prices come down a little bit. And so to do that, they really need to reduce the costs. And so to do that, you really need more efficient use of resources. Just an interesting note about that, though, is because farmers are looking at net income, they're not looking at necessarily maximizing their revenue, which means they're not necessarily looking at maximizing yield. So we could actually get into a situation where we're working with an optimal income for a farmer, but we're not maximizing the yield that we could be producing from that. And so I think the first thing we'll see is technologies that try to reduce those costs, and then really more pressure on increasing yields through perhaps genetic means. Then the second thing is really also sort of, again, this robots as a service, which I'll, and this again really touches on precision agriculture, making it available for smaller farmers.
Is that consistent with what you would, let's say a company here is thinking about crowdfunding, what would they need to do to qualify for your generally?
Generally, that's a bit of a long conversation.
No, keep it short.
We're really looking for fundable companies. So there could be a company that may be sexy to you and your Ph.D. advisor, but it's got to be sexy to a broad range of people. And so it's got to be attacking sort of a big problem. So it's something we have to be able to market. One of the things that we do like, particularly in sort of the data space, is anything that allows you to acquire proprietary data, because this is sort of an asset that you can carry forward and build on, and that somebody's going to really have to follow in your footsteps to recreate that data. So that gives you a really strong intellectual property lead, and so that's something I'd like to see.
To your question, what are we looking for? I mean, I would agree precision agriculture is very high on our list. I would add to that anything that's labor saving, so robotics. We've got one robotics company already in our portfolio, but in many parts of the world, particularly Western Europe, the US, getting the low, inexpensive seasonal labor is becoming almost impossible. And so robotics is important. Along with that is artificial intelligence, which enables the robotics to do more things. Which brings me to a comment I wanted to share. When one talks about technology in agriculture, there is a general tendency to focus in on crop genetics, on GM and seeds, and clearly that has been a major revolution, and you know, I've been part of it, and I love it, and you know, don't tell Greenpeace, I ran the world's first field test of a GM trait back in 1986. But when we look at the opportunity space for technologies in agriculture, that's about 5% of the opportunity space that we see. Water, remote, waste management, precision agriculture, robotics, artificial intelligence, new materials, biologicals. It's a pretty broad space. And the other comment, if I may, on a somewhat different topic. One of the problems we face, my fund has faced, and my partners and I have talked about at great length in the US, is we don't have trouble finding big market opportunities, and we don't have trouble finding great technologies. There are more than our fund can handle. What we do worry about is finding entrepreneurs. And I don't think it's the case here, but in the US, if you go to Silicon Valley and you stop someone and say, tell me about a local entrepreneur who's successful, they'll tell you about a guy or gal who took a great idea, built a company, sold it, went back, took another great idea, built a second company, sold that, and is working on their third. If you go to the heartland, to Ames, Iowa, and you ask someone about a successful entrepreneur, they'll tell you the same story. They'll tell you about a guy or gal who took a great idea, built a company, ran it for 35 years, and wants their kids to take it over. It's the farm, you don't sell the farm, it's the family business kind of mentality. So in the US, it's not that we don't have the entrepreneurial talent in ag sector, we don't recycle it. There isn't enough churn. Now I get the sense that that's not quite the same here, but as you think about your strengths here in Israel, I wonder if this entrepreneurial spirit and willingness to build a company and then go back and build it again, if that isn't a real strength that you've got here and part of what's driven all of this success.
Gideon, do you want to tell us what you look for and maybe answer that comment about the Israeli entrepreneur?
I'll keep it short. The answer is yes.
I appreciate that. So.
Next question.
I mean, definitely. And again, I see a change in Israel over the last 2-3 years. But the serial entrepreneurs are coming. And by the way, it's one of the funny things. I get now once a week, like the guys from the successful high-tech entrepreneurs knocking on our doors, like, okay, we're fed up with this Facebook, social media, blah, 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 blah. Can we do something in the real world? We want to solve real problems, and we want to go and make the world a better place. And it sounds maybe cynical, but it's absolutely not. It's really people that want to do something good for this world, and they want to bring their skills from the high tech and bring it into these companies. So what we're looking for from I think it's twofold. One, it is that we want to see those entrepreneurs that know how to grow a business. And if they can't do it, then at least they should be open to bring in other people that can help them. And I think if we look at the industry and at itself, at the areas we're looking for, again, I want to keep it very simple. There is a simple problem. There is too much demand, and there is not enough supply. So we're looking for companies that know how to either increase yields. I mean, we saw Utility earlier today. They're increasing their yield by almost twofold by just using much better routes. Or we're looking for companies that are using less resources to produce. And I think there's one other thing which besides, and of course precise agriculture is making that possible. There's one other area which is interesting in the food area, which is health benefits in food, value in food. So people not just eating junk food, but eating food with added value, making them more healthy.
Okay, thanks. What advice do you have for companies looking for money? Small, simple question, but I mean, somebody comes to you, makes a presentation. What is it you like to see? What are you looking for aside from a specific type of investment?
Well, I think besides everything we've discussed just now, for me, most important is to see professionalism. I want to see people that come with a clear story, that know what they're talking about, they've done their homework, they know how to build a company, they know where to bring the advisors from, they're not afraid to help, to ask for help, and they've built a serious business plan that shows how they're going to build this company into a successful partnership. I think that's very important. We want to see the managers that have done it before. We want to see partners that are willing to work together to really build something great.
I guess, you know, where we're investing, it's a little less about the, you know, sort of, it's certainly about the business plan, you need a strategic plan, so very similar continuation. The one thing I would say, to echo Gideon, is management. You can have a great idea, but without good management, you're never going to execute. So to us, at the end of the day, that's always sort of a go or no go. It's having a really good management team with a very clear vision and the ability to execute and the ability to know when to go outside for help and when to just do it themselves. And I think those are, you know, unquestionably, you know, that's one where without the right team, it doesn't matter. It often doesn't matter how good the idea is.
You're a little bit more of a late stage investor. Does it matter to you significantly if a company, do you see a big advantage? I think I know the answer, but for a company that's been through a GreenSoil, or, you know, that you may have been invested, or Trendlines has helped, you know, in an incubator.
Of course. Well, look, I think that
It's a layup.
a lot ultimately it depends on the entrepreneur. And, you know, there are certainly people who have done it on their own. It's really about lessons learned, because you read about it all the time, right? Some of the most successful people are people who failed a few times. So it's really about people who can learn from their mistakes and then keep pushing and going. It's often guys like Steve and Nitsa and like Gideon and other people like them who really help those people over those times. So I think that's really valuable, and they help them keep their eye on their vision and the goal line rather than getting caught up in what's happening, you know, yesterday or today.
Okay.
So we also look at a lot of early stage companies, and so just because we're sort of behind a fire hose here, we have to do a very quick sniff test. And if you're pitching investors who typically get a lot of deal flow, you have to keep that in mind. So if we see a lot of things that are just sort of half-baked, they go into one pile. and that's a big pile. And the more fully thought out, buttoned up pile is much smaller. So I would encourage the companies, the entrepreneurs out there, to really work on your presentation, focus on the people, because that's obviously tells us who is going to be implementing, are they going to be able to implement this? So really sort of feature, don't just give a list of names, that's sort of meaningless to them, highlight accomplishments so that we can get a sense of what you can do and what you have done in the past. And really just try to button that up really nicely. Start with sort of problem, solution, market size. Don't have any big gaps in your presentation so that some of these big questions can be answered, because when you see a lot of deal flow, you have to kind of make quick decisions. And so you want to make sure you get a deeper look, basically. So
one thing I would add is for us, it's also very important that we have a syndication of good co-investors. The company will always have good times and bad times you need good partners. We have as a policy, we try to keep about 2/3 of our funds reserved for follow-on. We want to see the partners that also have funds reserved for follow-on, because we need to be able together to support the company.
Mm-hmm. The only thing I could add to that is be realistic in your valuation expectations. I was on a panel in Canada once with a group of entrepreneurs, and someone asked the panelist next to me how he determined the pre-money value of a company. And he explained that first they take your projected costs or funding needs, and they double that, because there will always be unexpected things. And then they take your pro forma cash returns when sales start, and they divide that by 3, because the markets are always tougher to penetrate. He said then they recalculate your NPV using a 25% discount factor, multiply that by 0, and add $1 million. And he went on, there was a grain of truth in what he was saying, because the reality is that for early stage venture capital, you really can't take financial pro formas. They're our best guess as to what the future market's going to look like when we get there and how the competitors are going to respond. There's so many uncertainties that basically what really dominates is VCs will look at a company and say, boy, that one looks hot. I've got 5 other hot company opportunities to invest in, and they all have a pre-money valuation of $3 million. So even if your NPV says 6, you're competing with other ones that also have big opportunities and similar kind of excitement that are, it's a marketplace. And so, you do need to recognize that.
Yeah, that's a few comments. One, that's actually a mistake that I've seen a few companies made a few times, and obviously there's some rule of reason to it, but generally speaking, if you have the money, take it. I once had a client in a public offering who had set a floor for a price of, let's say it was, I can't remember exactly, but $8 a share, and they were ready to go out at $7.75, and they said no. And they God would not change his mind, and he never raised any money. So that's an extreme example, but a lot of times you should negotiate as hard as possible, and certainly you should, not accept something that's totally unreasonable, but if you don't have the money, you can't grow the business. So that's one point. And then the second thing is the point I made about having a, GreenSoil or trend lines, although it was a slam dunk question, was a serious point, because I can't overemphasize, especially for someone who hasn't been through it before, how important it is to have that expert guidance, whether it's through that or through some people on your board or people who are working with you who have had bad experience in the industry. But it's more than just that. It's experience in knowing how to prepare a company either to exit or to grow. And also it's the fact that you've had those type of people working with you that goes a long way towards convincing someone else that they should be working with you.
Yeah, just to sort of distinguish your second point from your first point, because I think that's, to my mind, that's the key. And since I don't really have, have a dog in the hunt in this one, since I'm not a venture capitalist, to my mind, as someone looking for venture capital, whether you get a $3 million valuation, $5 million valuation, $7 million valuation, to my mind, it's the partner who's going to bring you to the end, because if you're right and you can create the value, it'll be there and it'll be enough. And if you have the partner that's going to make it happen better, quicker, easier, if you have a value-added partner, you're gaining a lot more than the valuation. So if I were in that position, I'd really be thinking about who's going to get me to the end of that road and over the bridge, because that's the real key, rather than who's willing to pay me the most money, which may frankly be the most unsophisticated of the group. So.
Yeah, I was just going to say, especially for the companies in the audience, luckily we're not alone here anymore. In Israel, we see more and more funds coming into this area. Jack is here from Israeli Cleantech Ventures. Nir was here today from Aqua Agro. Terra Ventures, more smaller funds, Wanaka, of course. Sorry if I forgot someone, but there starts to be an ecosystem here in Israel of more and more funds that are interested in this area. So there are good investors around.
Yeah, and then biggest mistake, or I guess the question would be, what mistakes do you see people make? And I'm going to start off by saying the biggest mistake I've seen here, and more than I see it in the U.S., is number one, an entrepreneur or a scientist who's trying to build a business by himself without getting expert help, or someone thinking they know more than they really do about what's happening in the U.S. market if you're trying to get to the U.S., or what's happening in China, or how to build a company, when really what you know is the science side of it or some other part of it. You have to really understand what you know and work from there. And if you walk into an investor's office and they see that you don't understand what you know, it's going to be pretty hard to get the money. Any other comments on mistakes?
Focus on valuation, over-focus on technology, not enough thinking about the market. I mean, what are we actually trying to solve and how are we going to solve it? Just having a nice technology is not enough. Entrepreneurs that have a bigger ego than the company itself, that don't know when to step aside and bring in people that can help them. And I think these are the main issues.
I think one of the mistakes that people make is they try to boil the ocean. And so, I think you mentioned this here, where you have a single founder has an idea and he wants to raise $1 million, and he's here, and that goal is way over there. And what's going to get you over there is not one big jump, but a bunch of small baby steps. And so start by bringing really quality people around you. That's sort of human capital that you can raise. It's a little less expensive than raising that $1 million, but that's going to go a long way to getting you there. And then really work on your story. I mean, you have to pitch your story 180 times, 200 times before you're really going to get it down and come across as confident. And so just pitch everyone, anytime, anywhere, and then get to a place where you're investment ready. And then when you're investment ready, go and talk to the people who have capital. But I would hold off before then because you're just going to look immature and not buttoned up.
Two things. I'd say don't be afraid to say, I don't know, or we haven't gotten to that yet. The advice earlier that you do need to do your homework and put together your business plan, but particularly if you're at the venture stage, what you're doing is, and we understand this, you're predicting the future. You're saying the market looks like this today. In 3 years, when we can get this technology there, we predict the market, it will meet the market needs, and the customers will buy it. It's a predictive tool, and we understand that you will be refining it constantly. And so when you're pitching, if there's a question, don't ever try to bluff it, because one of the things that we are looking for is managers who are hungry for data, for real facts, for reality, and willing to change recognize when the data is telling them maybe you need to jog left or change your plan. So I wouldn't be at all, don't be at all apologetic about the fact that there will be questions asked that you don't have an answer to yet. I mean, we understand this is a journey. And the second thing, jet lag, I'm sorry. Just please go ahead.
He's going to tell you what you were going to say.
He'll tell me.
No, one more thing, because this is a note that Bob gave me. You need a really good lawyer.
And who would that be? You didn't finish the second part of the note, I'm sure, whatever that was supposed to be. So,
I remember my second
okay,
point.
good.
Recognize that we VCs are like everyone else. We're mildly schizophrenic. We want our cake and eat it too. So we will demand that you demonstrate in your business plan a laser-like focus on one product, first target. You're not going to be distracted, et cetera. The moment you convince us of that, the next question is going to be, so where else can you expand this and go into the other market? So, just be prepared for it. We're no less schizophrenic than the rest of the world.
And my last comment on this, when you're meeting with an investor, control the message and make sure you know who's doing the talking and what they're going to say, and be absolutely positively accurate in what you tell them. I have one situation where a very good client of mine was talking to a company. An outside director was on the line, and he started saying some things that were totally untrue. My client actually hung up on them because he knew it was false. Fortunately for them, he invested in them about a year later, after the CEO begged him about 3 times and made it clear that it wasn't really, that they didn't intend to give the message, and he had no idea this guy was going to say anything, et cetera. And fortunately, I sold the company for almost $1 billion. But they were lucky. If you're not accurate and you're not, you're going to, sooner or later, and a lot of times it's inadvertent. Just if you're not sure about something, like you said, don't say anything about it. And in closing, I guess I just want to say I think this industry in Israel is very much like the medical device industry was maybe 6-7 years ago. Maybe that's why you guys are in it now. But I also think it's a shorter time to market and less regulation and things along that line. So I think those of you who are in it, you're in the next hot area, and it's already here. And good luck to all of you, and want to thank the panel. They told me our time is up. So thank you all. Thank you.
Thank you, Bob. Thank you so much for this encouraging discussion.
Thank you, Nitza. It's looked at the great agenda. I only had the pleasure of hearing this last interesting panel, but kind of struck me that the conference, I think, was opened by Minister Yael Shamir, a partner, a good friend, and I guess we both suffer from the same phenomena of moving from industry to venture capital to government. So this is not a good trend. This is not going in the right direction. Of course, I can be encouraged by the fact that he's in politics and I'm not. So at least I'm in better shape than he is. But I think he's a great leader and visionary and a great addition to the people in government understanding the value of technology. Maybe I'll just start by Bob's closing comments, which I think are very much true. When we look in this industry today, it does resemble medical devices or life sciences, I would say 10 years ago, or high tech 20 years ago. But the main difference I see is actually what was said on this stage, is the fact that unlike those times, today Israel is an established world leader when it comes to innovation, and we have all the ingredients of a successful ecosystem, starting from a very mature financing environment, and you saw some of the representative right here. Very strong academia with very effective technology transfer offices, which know how to translate basic research and take it into the commercial markets. And of course, most importantly, great entrepreneurs, seasoned people, not necessarily from the agro business, but understand the potential. And as was described here, they have they probably made their bunch of mistakes. They have a lot of new ones to make, but they're willing to take that experience into this new and exciting world. And this is why we're excited at this upcoming opportunity. Within the Office of the Chief Scientist, being the main government entity promoting R&D science and technology, I can share with you that we see new ventures in this business throughout our programs, covering the entire life cycle of knowledge. We see it in academia, we see it in industry-academia collaboration, we see it within our incubators more and more, we see it within our main competitive funding schemes, and we certainly see it in the international collaboration. A lot of the multinationals are here. I'm happy to see you here. I can tell you they're frequent visitors to Israel. They come to our office, they come to the universities, they come to the incubators, they come to seek for innovation, understanding what we have to offer. And I cannot, I think the role of multinationals is extremely important. In this world, as in many others, they can serve as great partners to the young companies, taking them into the market, but also helping with a lot of the challenges that are required from any young company. So certainly glad to see you all here, and I know that we're going to hear more from you in the next coming years. I think the opportunity is ripe, as I said. We have everything that is needed, and we have the leaders, which are the people right here in the crowd, which are ready, willing, and have the capabilities of taking that opportunity and making it into real assets. So I do want to congratulate the organizers, our good friends from Trendlines, and of course all the other participants. I think, yes, you are pioneers, and hopefully 10 years there'll be a lot of nice stories to say, but I also think you're doing a very good business. So as such, it's probably the best combinations. If you can do good and do well, that's probably the place to be at. Very pleased to announce the winners of the competition. It was a tight competition. It was a tight competition, and that's why, unlike what is usually done, we're actually also going to name the second place, which we'll start. And I think all companies deserve a round of applause. But absolutely, I don't know if we're going to invite them to stage as well, the second place, or not. Whatever you say. Anyway, so not the winner yet, but the very close, very tight race. The second company to win this competition is Catalyst AgTech. Congratulations. Which brings us to the winner. Yes. Just wanted to be dramatic for a minute. Anyone? We can take our time, right? I mean, it's not.
Oh, we have free alcohol.
Oh, there you go. All right. Okay, let's move to the next stage. So the winner of I would say this year's competition, because hopefully we'll make it a tradition, right?
Of course.
The winner of the competition is Rutility. Now, please come to stage. We have something for you. Well, I do have something here. Now, there's actually something here, and it's worth money.
Yeah, it's from Ernst & Young.
Okay, it's from Ernst & Young. There you go.
Thank you very much.
Congratulations.
Thank you.
Congratulations. I do want to congratulate all the rest of the companies. I'm sure we'll hear great things about you. Let me assure you from our end, as the Office of the Chief Scientist and as the government of Israel, we will continue with our role, which is to create the infrastructure for this environment to thrive, as well as share with you all the risks associated. It's a long journey, but you can certainly count on us as your partner. Thank you very much.
Wow, it's over, almost. I just want to thank you all for a wonderful, exciting, and interesting afternoon. And before we are leaving for our free alcohol and dinner, I just want to express my deep thanks and appreciation to Trendline's team. Please. You are the best. You are the best. I couldn't have wished for more. So join us for dinner, and thank you so much.